so let's get started. Hello, everyone. My name is Peter Pejovich, and I'm a senior portfolio manager with Pejovich and Associates Private Wealth, which is a division of Wellington Altus Private Wealth. And today I'm very pleased to have a special guest on. It is Elliot Johnson, who's the CIO and COO of Evolve ETFs. And today we're going to be talking about a very important topic that still is widely misunderstood. And that is topics surrounding what is money and what is Bitcoin and other cryptocurrencies, and how does that fit in to a client's investment portfolio. So without any further delay, I'd like to introduce you, Elliot. And Elliot, if you don't mind, just give a brief description of who you are, how you got here, your background and expertise on Bitcoin, and then, of course, on Evolve.
Yeah,
Thanks,
sure.
Elliot.
Thanks, Peter. Thanks very much for having me on your webinar. And hello, everyone. Thanks for spending time with us today. So my name is Elliot Johnson, and I've been with Evolve ETFs since we launched the business in 2017. We've now grown to 28 ETFs and $7.3 billion of assets under management. It's all organic, and we're a very independent platform. And our background with specifically Bitcoin, since that's our subject for today, actually dates back to the start of the business. Back in 2017, we actually filed for Canada's first Bitcoin ETF. We were going to use the futures contracts that at the time were trading on the CBOE for that fund, because futures-based ETFs were a common thing in the industry back then. But we couldn't get it approved by the regulators. We were immediately shut down by the regulators. We also struggled with our custodian and other institutions that work with us because Bitcoin was so new back then that there was a lot of concern and anxiety about supporting a fund. It took us then 4 years to launch our Bitcoin ETF, EBIT, back in February of 2021. And so those 4 years were spent working with the industry, as well as identifying ways in which we could actually hold real physical Bitcoin in the ETF, which is what we currently do today. And I can tell you, Peter, just as a bit of an anecdote, when we first filed that filing in 2017, the response we got when we started talking to clients, talking to institutions and investors, for the most part, was a lot of career risk concerns. People saying, I don't want to know about Bitcoin. There's no upside for me knowing about it. There's too much career risk to know about it. In 2021, when we launched, absolutely, the entire industry.
Yeah.
And I don't know at that time of any advisors or advisor firms that were able to really talk about or deal with Bitcoin or Bitcoin ETFs back then. I
believe it was none. And even today, most still cannot talk about it. There's exactly a few of the independents that can. Many of the bank-owned firms still are not able to talk about it.
So the independents have a huge advantage here in terms of being able to bring Bitcoin into client portfolios at a time where we really are still so early stage on adoption, because the larger bank-owned dealers are still blocked from using Bitcoin ETFs for the most part. Almost no institutions are in the space yet. There are a few dipping their toes now because of the approval in the US of Bitcoin ETFs. But what's changed in terms of the conversations, even with those who aren't using it, is it went from 2017, I can't even know about it, there's too much career risk, to 2021, there's too much career risk for me not to know about this, to 2024, where I think advisors are starting to say, and institutions, there's career risk for me not to be investing or at least having a small allocation. That's 3 steps along the path there that we've noticed, but we still are in the early days because the compliance officers at the big bank dealers haven't caught up yet, right? There are only a handful of independent dealer firms in Canada that are really able to use these products and be forward thinking enough to adopt them in their practice. And so I wanted to lay that out a little bit as our lived experience of trying to help bring this asset class to investors, and really to highlight the fact that we have the ability to get a jump on the big institutional money that's coming, but isn't here yet.
Well, the institutional money is coming. There's already several large institutions like Fidelity, for example, that's already starting to incorporate Bitcoin into their broadly held, broad-based ETFs that are, used in many pension plans and other types of institutional monies. So that's like an automatic in effectively for the asset class. And it's not just them, it's spreading really across the whole industry and the whole globe.
Yeah, and maybe a little bit later on, we can talk about what that institutional money means for the upside of the price of Bitcoin, because I think there's a very positive flywheel effect that's going to happen as the size of the market expands. It'll allow bigger investors to come in and so on and so forth.
Great. No, that's great. Thanks, Elliot. So my one of my main goals of this webinar is to have clients and just the public at large just have a better understanding of what is Bitcoin and how does it potentially fit into your investment portfolio. But before we even get to there, really we actually need to kind of back up a bit and define what is money. Because it's something that I think we all take for granted. Like if you ask the question, what is money? Most people will be like, what do you mean? It's, it's the dollars in my wallet, or it's the number, the digits in my bank account. And they don't really think about it, much beyond that. But I think we should, because I think if we have a better understanding for what really is money, then we will have a better handle on how Bitcoin potentially fits in as an alternate form of digital money.
Yeah, so on that, if I could share my screen, I have some slides
Yes,
here
please.
that I think would be able to hopefully be helpful in talking about the subject. Just as a quick recap before we get to your question, we have 3 crypto ETFs at Evolve: EBIT for Bitcoin, Ether for Ether, and ETC, which holds Bitcoin and Ether in their relative cap weights. And we've seen a lot of folks buying ETC lately because that way they don't have to try to guess which of these crypto assets is going to outperform, and it's kind of a turnkey solution for the asset class. And between Bitcoin and Ether, you have the vast majority of market share within the crypto complex. So it's a solution that people are using, and it's available in both Canadian dollar and US dollar classes. So it can be used widely across different accounts.
Yeah, and
but
just
let's
to
get
repeat,
to your what is. Sorry,
actually, sorry, Elliot, just to repeat, your crypto ETFs were one of the original crypto ETFs approved anywhere in the world, correct?
Yeah, that's right. And it was one of the highlights of some of the work we did during the pandemic, because everybody was locked at home, but there was the ability for us to put these products together, and it was no small amount of work for us to get the regulators comfortable with how we structure our funds, the way in which we have custodians, everything's regulated. We are spot backed. These are not using derivatives like futures.
Right.
But yes, in fact, when we saw the filing by BlackRock in the US for their physical Bitcoin ETF towards the end of last summer, we had a look at it and we noticed that they were using exactly the same structure that we had put into EBIT when we built our fund. We're still waiting for them to send us the royalty check for copying our design, but I guess that's a form of flattery. So Canada was first, and we've had a 3-year head start on the rest of the world, and the products have performed extremely well since then. So it's definitely an opportunity for investors here.
Right. Well, if it's not broken, why fix it, right? So.
Exactly. So you mentioned what is money, and maybe I could just jump into that.
Yes, please.
I think this is a question that people don't contemplate very often when their money is fine, but people think about all day, every day when their money is not working well. And so really the difference is there is Canadians, I think for the most part, our dollars are okay. But if you lived in Turkey, if you lived in Venezuela, you would be thinking about the value of the money that you have endlessly, because I think Turkey has something like a 75% monthly inflation rate. I mean, it's hard to actually imagine what it's like to live in a country going through hyperinflation. But I do think Canadian investors are more attuned to this problem than they used to be in terms of what money is and how it has value, as a result of the inflation we've seen over the past 18 months. And we can talk more about that later on. But just to kind of zoom back out to what is money and how does it work. So money is and has always been a technology. Even if you go back to pre-printed money, you had gold coins, and before that you had beans or people using shells. There was always something which was a physical technology. And the first thing money is supposed to do is to solve the problem of the coincidence of wants. And so that problem is very simply put, if I'm a farmer and I grow apples and you're a farmer, Peter, and you grow oranges, well, I might not want oranges. I might want, you might not want apples on the day that I want to buy oranges. And then how do I go and trade my apples for a cow if I need, something, or an axe? And then how does that work? And people coming together in a marketplace when they can only barter with the products that they themselves create, it just doesn't work and it doesn't scale. And so we have money where everybody gets a price for their products, and then you use the money that you get for selling your products in exchange for other products. And I think we all kind of intuitively get why that's relevant. So the thing about money is it's a technology. These days, it very literally is. I haven't used paper money in Canada for a long time. But it's not just technology. And this goes to some of the questions people have about Bitcoin, saying, well, why can't it be copied? And why can't there be another Bitcoin that would be just as good? And that's because of the consensus layer. These things come together and the social consensus has to be there. And so my favorite example is Canadian Tire money and the $5 bill from Canadian dollar bill. It's the same technology. It's paper. It's a rectangle.
Right.
But it's a very different consensus layer, right? You can spend Canadian Tire money in Canadian Tire, and you can spend $5 anywhere in the country. And I think that really underlies the fact that at the end of the day, money has to have widespread acceptance, or it just isn't money. No matter how much I might want it to be, or you might want it to be, everybody needs to agree on it. And this leads into the 5 desirable properties of money. That if you check all 5 of these, you really have good money. And if you lose on any of them, then you have a problem, right? So scarcity, this is why gold became an early money, very hard to produce,
Yes.
very difficult to create more of if the value of it goes up. It's also one of the reasons people are concerned about inflation today, because we've seen an enormous amount of money printing, reducing the scarcity of the Canadian dollar, of the US dollar. And we know what that feels like because we've seen the inflation that results. Divisibility is an important one. Can you combine and separate it? Can I pay you, $500 for something and then spend 25 cents at your kid's lemonade stand, right? These are different denominations. And, if you're earning a bunch of money, can you put it together and buy a house? And, this is the sort of thing that things like gold are not very good at. You'd have to melt it down and recombine it, and it just isn't very good. Portability is it's heavy. You have to insure it. It's not easy to use. And also gold fails on portability, which is the next property that I think becomes kind of intuitive when you think about it, right? You need to be able to take it with you and move it across space. So digital money is obviously the most portable. Just compare email to the postal service, right? Like it's instant when something is going digitally. But other than that, obviously paper money is better than a bag of gold, and you can carry it with you. Durability is important. You don't want money that deteriorates over time, if it rains or so forth. And so moving money across time, this property also a little bit intersects with inflation in terms of moving money across time. Like I'm sure a lot of your clients think a lot about estate planning.
Yes.
And that's the ultimate, ultimate act of moving money across time. You want to be able to give your money to your kids or your grandchildren, but you don't want to just have them have the money. You want them to have the purchasing power of that money. And that is a real challenge, and why obviously, you need to work with an investment advisor to try to, outrun inflation with your investments. But it's not an easy thing to do, to move money across time, but hard money moves across time better than money that can be printed. And by hard money, hard assets as well, real estate, gold, so forth. And then ultimately recognizability, that really keys back into this idea of consensus, right? We all need to be able to agree that it's money. We need to be able to recognize that it is. We need to be able to value it the same way. And so if you have these 5 properties, I think you've got a good technology that can be used as a money and is likely to contract the consensus of people in order for it to be used as a money. And then I didn't put it on here, but the other 3 considerations people often talk about with money is they say it's used as a store of value, it's used as a medium of exchange, and it's used
Yes.
as a unit of account. And those three properties do different things. Store of value, right, is to transfer your value through time. Medium of exchange, can I buy and sell things with it? And do I use it as a unit of account? Am I denominating my life in it? I would say Bitcoin has very comprehensively checked the store of value box with a lot of investors today. It's still early in terms of being used as a medium of exchange. You can buy
Yes.
the odd thing with it, but it's not widely used. We may see that develop in emerging markets first, where they need a new medium of exchange. And then as far as unit of account goes, I'm starting to think about my life in Bitcoin terms, because I've, got a fair amount of Bitcoin, and I think about, well, what does that buy me today versus yesterday? But I
Right.
have to admit, I still think about where I am in terms of Canadian dollars, and I think that's a slower thing to shift. So anyway, those are
Yeah.
just some thoughts on money and how money works.
Yeah, so I just want to add just really quick, all this is actually hits very close to home. I'm actually an immigrant to Canada, and I moved to Canada from the former Yugoslavia in 1975. So although I've been in Canada very long, I do remember and about what happened in the former Yugoslavia, especially during the wars. And I don't know if this is going to show up on camera. I don't know if you can see this, but this is former, let's see, it doesn't work too well, but this is former Yugoslav money that's now essentially defunct. Here's another one, and I don't know if you can see, but there's a lot of zeros on this paper. And the paper that it's printed on looks actually like very cheap paper too. It doesn't look like, money paper. So essentially, for those who don't know, I mean, the currency collapsed in the former Yugoslavia during the wars, and essentially this money, which is called dinars at the time, went to zero. So it just, obviously was printed to oblivion during the war, and often it is wars that that cause governments to print money into oblivion. And it failed, and it had to get reset and restarted. So having a stable form of money, not just for us but for our kids and grandkids, hits very close to home, which is why we're
Yeah,
having this
for
talk.
sure.
Yeah.
I think so, and I think this is also goes to why um, I think in terms of Bitcoin adoption, you sometimes find more people in emerging markets where they don't have stable money today. They just inherently understand Bitcoin, and it's
Yeah.
harder for people who have had historically higher quality money. So
Hmm.
yeah,
Correct.
and it really does go to what's your lived experience with those kinds of problems.